Gold price defies rise in real interest rates, hits new JPY record, as inflation spooks investors. Gold prices rose to two-week highs in US dollar terms and bullion bars hit new record highs in Japanese yen on Monday even as longer-term interest rates worldwide surged to fresh three-year high and real US interest rates, after adjusting for bond market forecasts of inflation, approached zero for the first time since March 2020's COVID crisis, says Atsuko Whitehouse at BullionVault. Gold bullion priced in the euro today hit €1,800 after France's far-right presidential candidate Marine Le Pen went through to the 2022 election's second round of voting against Emmanuel Macron. The metal also touched one-month high in British pounds above £1,500 per ounce. Ukraine's government meantime urged its citizens to flee the eastern Donbas region ahead of a widely expected assault by regrouped Russian forces. Despite this sharp rise in interest rates, gold has not fallen, but rather risen, suggesting that investors are becoming even more wary of inflation, says Bruce Akemizu, chief director of the Japan Bullion Market Association. Spot prices for London gold bullion gained 0.7% to $1,962 per ounce today, the highest dollar rate since the 25th of March, after rising 1.2% last week. 10-year U.S. Treasury yields, a benchmark rate for Washington's as well as many finance and commercial borrowing costs, meantime touched 2.77% this morning, the highest in 3 years. The real interest rate implied by inflation-protected 10-year TIPS bonds also edged up, rising to -0.11 Monday lunchtime, its least negative in more than 2 years. The inverse relationship between gold prices and real U.S. interest rates has weakened sharply in April after reaching its strongest on a rolling 21-day correlation since August 2020 last month. Tending to rise when real rates fall, the gold price now shows an R-squared of 23.7% with the yield on 10-year TIPS, well below its March average of 70.8%. Inflation will remain high this year and next even as the Fed moves steadily to lower the pace of price increases, Cleveland Fed President Loretta Mester said Sunday in an interview on CBS. U.S. consumer price data, due out for March on Tuesday, are forecast to show a rise of 8.4% year-on-year, the fast pace since 1981 and up from 7.9% in February. Gold remained well bid amid inflation worries, said Daniel Hines, senior commodity strategist at ANZ. The precious metal has seen strong investor demand as a hedge against what looks like structurally high inflation. Gold prices in Japanese yen today climbed back to March's new all-time high at 7,939 yen per gram as the currency weakened to its lowest against the dollar since 2015. The euro snapped a 7-day losing streak on the FX market while France's CAC 40 rose 0.5% following the first-round presidential election result and the UK's FTSE 250 fell 0.3% by lunchtime amid fresh political pressure on Finance Minister Sunak. Asian stocks tumbled, led by China's CSI 300 index losing 3.1% after producer price inflation in the world's second-largest economy came in higher than expected at 8.3% per year. With major financial center Shanghai remaining in lockdown amid the Chinese regime's zero-COVID policy, the National Consumer Price Index climbed 1.5% year-on-year, above expectations for a 1.2% rise. Oil prices meantime continued to decline on Monday, following a second straight weekly decline with a drop of 2.4% in Brent crude while U.S. benchmark WTI slid 2.7%. Prices for silver, primarily an industrial metal, rose 2.1% to $25.27 per ounce, while platinum, which finds two-thirds of its demand from industrial uses, went up 0.6% to $986 per ounce. The price of palladium, of which Russia is the number one miner, climbed 4.5% to $2,534 per ounce, a two-week high, after surging 6.6% on last Friday's news that Russian platinum and palladium refiners are now suspended from trade body the LPPM's good delivery list. The move was already made for gold and silver bars by the LBMA on the 7th of March.